Imagine the world economy is a giant apartment building. In 1945, the building had just survived a massive fire called World War II. The wiring was destroyed, the plumbing was leaking, and everyone was arguing about who should pay the repair bill. So, world leaders got together and said, maybe we should create a housing society before someone starts another fire. And that's how the Bretton Woods Institutions were born. In July 1944, representatives from 44 countries met at the Bretton Woods Conference in New Hampshire, USA. Their mission was simple: how do we stop the world economy from turning into complete chaos again? They wanted to establish a post war economic order based on notions of consensual decision making and cooperation in the realm of trade and economic relations. Today, these institutions still influence everything from economic crises and development loans to debates about China's rise, debt traps, and the growing influence of BRICS nations. Let's break it down. The two main Bretton Woods institutions are the International Monetary Fund and the World Bank. The IMF, having come into formal existence in December 1945, created a stable climate for international trade by harmonizing its members' monetary policies and maintaining exchange stability. It is able to provide temporary financial assistance to countries encountering difficulties with their balance of payments. The IMF helps countries stabilize currency, manage balance of payments crisis, and prevent financial collapse. But IMF loans often come with conditions, mostly like opening up the economy and undertaking LPG reforms. The World Bank has a different job. Its goal was rebuilding countries after World War II and later helping developing nations grow, much like the world's infrastructure investor. The World Bank serves to improve the capacity of countries to trade by lending money to war ravaged and impoverished countries for reconstruction and development projects. Over decades, it has funded thousands of development projects across Asia, Africa, and Latin America, assisting in creation of roads, power plants, schools, water systems, etc. How did the Bretton Woods system work? The original Bretton Woods system linked currencies to the US dollar, and the US dollar was linked to gold. The countries agreed to keep their currencies fixed but adjustable within a 1% band to the dollar, and the dollar was fixed to gold at $35 an ounce. This ensured that no sudden exchange rate shocks and uncertainty affects international trade. So, Indian rupee, British pound, Japanese yen, all currencies were linked to the dollar. And everyone trusted the dollar because it was backed by gold. Gold acted like the foundation of the system, a guarantee that if governments want, they can exchange their dollars for gold. It was not the daily payment method. Countries liked the system because it brought stable exchange rates, easier international trade, and more predictable global economy. The United States had the responsibility of keeping the price of gold fixed and had to adjust the supply of dollars to maintain confidence in future gold convertibility. Over time, the US printed more dollars than it had gold, implying that the United States could not fulfill its obligation to redeem dollars for gold at the official price. So, in 1971, President Richard Nixon ended the dollar's convertibility to gold, and the original Bretton Woods monetary system ended. The institutions, however, survived, and they're still here. Fast forward to today, the IMF and World Bank continue to play major roles. When countries struggle with foreign exchange shortages or debt repayments, the IMF often becomes part of the conversation. Meanwhile, the World Bank continues financing development projects worldwide. But there are growing debates. Many developing countries argue that these institutions were designed in a world dominated by Western powers and do not fully reflect today's realities. Countries such as India, China, and Brazil want greater influence in global economic governance. This is where things get interesting. The growing influence of BRICS and the new development bank has sparked conversations about whether the world needs alternatives to traditional Bretton Woods institutions. Countries now want more choices. That doesn't necessarily mean the IMF and World Bank are disappearing. It means the global economic system is becoming more competitive and multipolar. As they mark their 80 plus year history, both institutions face ongoing debates regarding the relevance, governance, structures, and the impact of their lending conditions on developing nations. As new powers rise and new institutions emerge, the big question is, will the Bretton Woods system adapt to the 21st century, or will the world build a completely new economic architecture? Let me know what you think in the comments. If you watched till here and learned something today, clap for yourself and don't forget to like, subscribe, and share for more such IR explained videos.